Good evening and welcome to Be Informed. My name is Carl Buhariwala and I founded Be Informed to help people make good decisions. Today we'll be looking at the tax and federal budget scenarios in Australia, and I'm joined by Raymond Isaac of the Bottom Line Business Advisory. We'll be taking us through a seminar on Financial Year 25 Taxation and 2024 Federal Budget Update in Australia. This session is being recorded, and before I proceed, I would like to acknowledge the traditional owners of the lands on which we're meeting today and pay my respects to their elders past and present. This session is in relation to the Australian jurisdiction. So if you are considering reviewing the material in this session from a location outside of Australia, you may wish to reconsider its relevance. And the content of today's session is current as of this month. So if you do rely on the material in a future time, you may wish to reconsider its applicability, given government policy does change from time to time. From a housekeeping perspective, the session is being recorded, so if you do have to leave early or go and come back into the session, that's fine. You can always view the entire session online through our YouTube channel. And if you do have any questions, please send them through to the chat in the chat function, and I will then relay them to Ray, who will answer them during the Q&A session. And there is also a one-page handout that Ray has kindly prepared, so you will get that copy if you have registered by email through Eventbrite. I'll send that out by email to registered participants following the conclusion of today's session. And with all of that in mind, Ray, I'll hand over to you, and we can get started on the seminar.
Sure. Thank you so much, Carl. Hello, everyone, and welcome. Thanks for making the time for us today. First, I'd like to thank Carl for providing this opportunity and Be Informed for providing this opportunity to speak to you today about the highlights of the federal budget in 24-25, as well as what's on the ATO radar for the next financial year. So first, a little bit about ourselves, about us. So the Bottom Line Business Advisory, we are business focused. We assist small and mid-sized businesses getting their business and accounting, taxation, and business advisory needs met. We embrace innovation, technology, and promote efficiency. We also provide individual services to meet individuals to help individuals to meet their compliance requirement and tax obligation, and ensuring the maximum possible refund for them. We are a CPA certified firm, registered tax agent, and I myself have like a 20 years of accounting experience between big corporate and public practice. All right, so let's straight jump into it. So if we go to the second slide, please. So yeah, addressing the elephant of the room, Stage 3 tax cut, revised Stage 3 tax cut. So the Labour government has revised that, is the main focus of this year budget. So the government has actually revised the already legislated Stage 3 tax cut, especially changing the marginal tax rate. So the 19% has reduced to 16% for the tax bracket of up to 45,000. Tax-free threshold remains unchanged. 32% reduced to 30% for the tax bracket now to 135,000. And then they have reintroduced the already abolished 37% for up to 190K. Above that, you pay 45%. So what does that mean? If you're earning 50 grand, that means that you get $929 a year in tax cuts. If you're earning 100,000, that means you get 2,179. However, if you're earning 200,000, you get your tax cut reduced from 9,075 to 4,529. So it's not good news for everyone, but I think it will be a good news for the majority of the Australian people in the jurisdiction. The other two notable announcements in the budget, along with the measure to ease cost of living pressures. We're actually investing in the future made in Australia. So this involves a significant investment in renewable energy, infrastructure projects, skill development, and the like. And also significant investment in housing and infrastructure. So the government has committed like 6.2 billion to build more homes to address the housing shortage in Australia. So the low income tax offset remains unchanged, $700 for anyone earning under $67,500. And it will be reduced until it's phased out at 600,000. So this is a bit underwhelming in terms of tax change. A lot of people were actually hoping to see more reforms and changes, but I think it adds more money in the bucket of most people. So that's a good and positive result for this budget. So next slide, please. The other measure was the temporary asset write-off. So for small businesses, it's currently legislated they can write off assets under $1,000. It was legislated for up to 30th of June 2024. They can write off assets up to 20,000. That is proposed to be extended to 30th of June 2025 now. And this is as on the per asset basis. To be eligible, you need to be a business with a turnover under 500 million. So most of the business in Australia will be eligible to have that. And because it's on a per asset basis, it provides us substantial flexibility for small business, particularly looking to acquire new equipments or deploy new technology or anything like that. So anything above that threshold can still be added to the small business pool if they're using the small business simplified depreciation, and can be depreciated on a 15% or 30% in every year after the first year. So that was the news for small business in this particular budget. And next, and I think that was the most popular and the most advertised measure, is the relieving the energy bill measure. So every household, every household in Australia will get a $300, and this will be made available as a credit in your electricity bill. There is no criteria or eligibility criteria. This is like universal, everyone will get it. And it's automatic. So your energy provider will just apply with the federal budget, with the federal government to get this $300 and apply the credit to your tax bill. The other measure that was introduced similar to this one is the $325 for small businesses. And this one will be administered by the states. So each state will just have its own eligibility criteria and application process. And small business, some of the small business will need to have an application process. There are eligibility criteria based on the electricity usage. Here in Victoria, however, is going to be automatic. So your electricity provider will automatically apply with the state government and just to apply the credit to your energy bill if you are a small business and eligible for that rebate. The other announcement from the government was actually expanding the digital ID system. So I'm not sure if any of us used my GovID. I use it every time to just log into my ATO portal, but it's been expanded to business, like the business portals as well and other government agencies. So the government has committed 288 million over 4 years to the ATO and other agency to actually improve and expand the MyGovID platform, expanding the access to it and improving privacy and security. And they're looking actually to deploy that platform across multiple government departments, including Services Australia, which is Centrelink. So it's not going to be only for businesses and ATO, but it's going to be across other government departments. So again, they're looking for collaboration, governance between multiple government agencies. And the last measure that was announced in that space would be, I would actually to highlight, is the superannuation on paid parenting leave. So if someone is eligible for the parenting leave, so if you meet the work test, you meet the income test, and you are eligible to get paid a paid parenting leave from the government, so the government will start paying super on that starting on the 1st of July 2025. So that's good news, especially for new parents, to get this additional super, because before, when you get a parental leave, you lose on super. You get some payments from the government, but you lose in super. So that will no longer be the case. And again, 12% is going to be the superannuation guarantee rate in the year 2025. And that is what is going to apply by the government. So, yep, so that's what has been announced in space of the tax on superannuation. So next slide, please. All right, so one of the major changes that the ATO has announced recently is a change to the working from home claim when you try to claim working from home hours in your tax return. So currently we have two main methods. So we got the fixed rate method, or the revised fixed rate method now, as well as the actual cost methods. Before, we used to have a temporary shortcut method that used to be during COVID. So you could claim like 80%. So 80 cents per each hour worked from home, but that one is no longer available. So from the 1st of July 2022, the revised fixed rate method, which would allow 70 cents per each hour worked from home to be claimed. However, they actually expanded that to also include mobile and internet, which used to be claimed separately. And also they required an additional record keeping. So you no longer can estimate the number of hours that you work from home, but you must have a diary or timesheets, a roster, or whatever records to substantiate the exact number of hours that someone was working from home. The actual method, on the other hand, would require the taxpayer to keep all records, including all electricity, cooling, heating, gas, cleaning, and the like. And also will just need to substantiate the number of hours worked from home and the dedicated workspace, and then you need to have more details on the basis of calculation. So to make it simple, you can no longer claim internet and phone separately if you're claiming work from home on a fixed rate basis, and you will need to keep an accurate record of the worked from home hours, time. So let's say that a lot of people now working on a hybrid basis, so they are sometimes at the office, sometimes working from home. You will just need to have the dates on a calendar or whatever to substantiate the days worked from home. If you work from home 100%, that will make it easy. So you just need to substantiate that you are working from home 100%. So the main criteria to be able to claim working from home, that you need to actually keep the record, and you need to have incurred as an additional cost for being working from home. So on that space, I think keeping a record is one main criteria to be able to do that, whether it's a spreadsheet, and a mobile app, or any timesheets. So that's one of the biggest compliance thing. So next slide, please. All right, so what's on the ATO radar for this or for this financial year, 24-25? So we notice there is a lot of compliance activity from them. So they have got a lot of resources, a lot of things happening around the data matching program. So the data matching program, they actually gather a lot of data and information from multiple agencies, whether it's private or government agencies, and they use this data or this information to compare against what taxpayers have submitted. So they acquire data from obviously Centrelink, title offices, real estate transactions, banks, OSTRAC, credit and debit cards, motor vehicle registries, and the like. So also the gig economy, so Uber, Airtaskers, Airbnb, all these guys, they provide the data to the ATO now at some stage. And what's on the radar is actually one of the biggest focus is rental property deductions. And within the rental property deductions, so if you are a property investors and you own or recent investors, I'd say, so one area of focus is the repair of maintenance, particularly what's so-called initial repair. So if you incurred a repair immediately after you acquire the property and before you lease it out, and this repair is not a result of a wear and tear of the property being leased out, these costs actually are clearly disallowed by the ATO and specifically disallowed. So you can't claim that. It can be added to the cost base to reduce your future capital gain, but it can't be claimed outright. Interest is also one area of focus. So any parts of the mortgage that is used to finance a private or domestic assets cannot be claimed. So if you redraw a mortgage to buy a private car, whatever, or to go on holidays, you will just need to make sure that you proportion the interest accordingly, and you don't claim 100% of the interest. So that part of the redraw that is used for private asset should be disallowed. Travel can no longer be claimed for investment properties. That was disallowed back in 2017, 1st of July. So you can no longer include travel cost, whether it's to collect rent, to attend to the property, or do maintenance. Travel can no longer be claimed. The other thing is depreciable assets. So when you buy a depreciable asset, you can claim that. Obviously, you will need to depreciate it over a number of years. The other area of focus, other than the rental properties, work-related expenses. We talked about the working from home and the changes applied to this. But also they look, again, travel, the usage of car, and the compliance of the record keeping in terms of car, and if someone have a logbook or not. Internet and mobile claims, especially if you using the actual cost method, you will need to substantiate what basis you've claimed your internet and mobile, as well as self-education. And basically, the focus would be always on high amounts. And they use a system called benchmarking. So they collect like the average claims for every occupation. So engineers, for example, how much the average claim for each car, and they use that as a benchmark, and anything or any claim that is substantial enough to be outside of this benchmark would raise a flag, and you might get some questions from them. So it's always good to have the records kept accordingly. Cryptocurrency, that's one big thing happening over the last number of years. A lot of people have crypto transactions, and they are unaware that they need to report these transactions into their tax returns. So again, the ATO recently would obtain data from the cryptocurrency providers and match that and compare it against the taxpayer tax return. So capital gain and losses from cryptocurrency are actually taxable and should be included in the tax return. So next slide, please. For small businesses, cash payments is one big thing. So again, the benchmarking that we talked about before, they compare similar business within the same cost postcode with the same turnover and same size to ensure that claims and revenues are comparable. So if the turnover of certain business in a certain postcode is outside the benchmark, they would conduct some visits and try to do data analysis to identify cash payments or point of sales, sub-present softwares, or anything like that. And finally, the side hazards. Again, they obtain all the information from the gig economy companies, Uber, Airbnb, and Airtasker particularly. Uber is one big thing. And I must say that it takes these companies a little bit of time to submit the data for the ATO. So someone might be able to have the tax return lodged, prepared and lodged with the ATO, no issues, but later on, Uber, for example, will submit information that some income was reduced from the ride sharing, and then the ATO might issue a revised assessment or ask questions on why this income was not included. So lastly, they keep on stressing on record keeping. So in the case of an audit, and again, we're seeing a lot of compliance activities from them recently, record keeping is your savior, really. So if your records are in a good shape and are in place, and you keep all the tax receipts and everything, that will make the audit a very easy exercise for the taxpayer. Obviously, bank statements can be used as a supportment, but in many cases, they can't be the only substantiation that is provided to the ATO. They would certainly require some additional documentation and substantiation to be in place, things like invoices and receipt, not purely bank statements. So that is pretty much it from my side about the highlight, and I think I'm exactly on time.
Thank you, Ray. I'm
No
sure
worries.
those that have joined have taken away important pieces of information from your seminar. Ray's details are on screen, so if you do have any specific queries, please do reach out to him directly. This session is just providing general information only. So if you do require any personal information about your circumstances, including from a specialist perspective, like in relation to taxation advice, then please do consult a professional, in this case, like Ray.
Thank you.
Before we proceed on to Q&A, I just want to remind everyone that this session is being recorded. So if you have joined late, don't worry, you can watch the entire session on our YouTube channel following today's session. It'll be posted in a few hours after 7 o'clock today. And Ray's also kindly prepared a one-page handout, which will summarize the material presented during the seminar, and that will be emailed to registered participants following the conclusion of the session. So with that in mind, let's Ray, let's jump straight into Q&A. And
Sure.
one of the questions that we've got is actually around one of the last topics that you talked about, which was record keeping, right? Have you ever had a client that's been audited, and at a high level, can you explain what the process is?
Yeah, that's a very good question, and yes, and that was quite recent. So the client was, he had two investment properties. One of them was acquired recently in this particular year. He has a significant donation claim. So they've asked for all receipts to support that, and they asked for the real estate agent statements, invoices, and as well as the bank statements. And I'm thankful actually for this particular client because he was so organized, and everything that they asked for, they got it on a timely basis. So when they asked for the information, we were able to produce it quickly, and that's actually promoted credibility because everything was in place. So the audit was produced a very good outcome, and only because I really commend the taxpayer to have everything in place. All records were kept correctly. So again, so the best way, what is available for you, how to keep record well. To keep record well is one of the things they have developed a very good app on the ATO called the My Deduction, which you can download on your mobile, take picture of receipts, and enter all the information, right? And you can export to them at the year end and provide that to your tax agent or to prepare your tax return from. So that's one method. But also, I would recommend for everyone to have like a folder called a tax in your email and just to drop everything in that folder. So this is easy to search, and it's very, very easy to drop your emails or have a rule in your email to forward to file all tax-related emails in that folder. But yeah, so invoices as well as bank statements to support your claim is what they require.
And how long did that audit take, Ray? Was it a few week process or is it a month process? How long was that audit?
So it was around 4 to 5 weeks. For whatever reason, the ATO officer didn't ask for everything all at once, so she kept coming back with more queries every time. Again, they asked about the all claims, income and expenses for the investment properties, donations, and the car as well, lookbook and all associated cost with the car except for the fuel. So you are allowed to do a little bit of calculation for the fuel cost, but everything else, and you don't have to keep the receipts, by the way, particularly for fuel. So petrol, you can go away from, you get away from with this, but everything else you need to have like insurance, maintenance, and everything. You need to keep the invoices. So it was around 4 or 5 weeks, and involved few meetings and few phone calls.
Right. And did you support with those phone calls, or did the client have to sort of do that directly with the ATO? How does that work when you have a tax agent as well in the mix?
It was 100% through me. So I
Oh.
was the one that doing all the communication with the ATO. However, I had several meetings with the client just to ensure that he got everything in place. And then when I got the information from client, I still write to the ATO and present to them in the way that is consistent with the legislation and with the law.
Mm-hmm. Beautiful. Thank you, Ray. The next question that we have is around the cash economy, and you've touched on, the gig economy and side hustles. How prevalent, I guess, is the ATO's review, I guess, of transactions in the cash economy? Is it a key area of concern, and should individuals and businesses be scrutinizing their approach when they submit their tax return?
Yeah, so they definitely trying to get better at it. And as I mentioned, it depends on the provider. So for sure, Uber submit all the data, so they get that. Some of the smaller providers like Menulog and DoorDash and all these sort of providers might not be as timely as providing the data to the ATO as Uber. They quite keen to ensure that all income is reported correctly. Obviously, it's hard for them to when it's cash. But again, if the money is transferred to your bank, it's too hard to not to report it. They will just know. And I must say, it takes a little bit of time. So you submit the tax return today, you might get a letter from them 6 months from now or 12 months from now. So they're dependent on external provider to provide the data, and the matching might happen later, right? And when that happens, it just doesn't look. So it just put people on their radar really for the coming period. So yes, they looking to ensure including everything. Crypto is one big area in there as well. So a lot of people have made a lot of gains in the crypto side of things, and they want that to be reported or included in the tax return going forward.
Beautiful. We just got a quick question on EV, so electric vehicles. If there are no petrol purchases being made in relation to a vehicle, Ray, how do you make claim for the electricity consumption that's used to charge the vehicle? Is that allowed from a deduction perspective?
It is allowed, and it is a good question. It's 4.5 cents for kilometers that traveled by the electrical vehicle for a charge cost, electricity cost. So, like instead, we have the cent per kilometer method for the petrol car. For electrical vehicle, we claim it in the same way. But of course, the rate is different. So the rate is to offset the charging.
Beautiful. One broad question that we've got on the federal budget, Ray, is around the tax cuts that you've talked about. And everyone should sort of be seeing that trickle through with their, monthly or fortnightly or weekly pay. You will notice that the amount is sort of increased given the PAYG component will have decreased. Yeah.
Yeah.
Ray, what are your sort of thoughts or your sort of your business's thoughts on the impact that this will have on cost of living pressures and the economic situation? Some general comments will be appreciated.
Yeah, so that's a very good question. Some experts would like anticipated that might add to the inflation. I don't think it will, because I think it was measured and targeted. However, a lot of people thought it was a great introduction, abolishing the 32.5 and the 37 marginal tax rate, and having everybody under 200,000 to pay 30%. So that would have made everybody's life very, very easy, and made a lot of strategies utilizing trust and companies and things like that for tax planning way less than it is now, right? But the decision was made by the federal government is to reintroduce the 37% again. I don't think this is a good thing. I think the government needs to look at tax reform, particularly around interest rate, because what's so-called the bracket creep, because now, because of inflation currently, and everyone is earning a little bit more, but when you pay a little bit more because of the marginal tax rate, you pay more taxes. And then the government revenue increases, but you don't feel that you get enough money in your pocket to address the cost of living pressure and the inflation and the interest rate and all of this. So I think maybe it was aimed not to fuel inflation a little bit more. However, I must say that people with a higher income tend to invest more than spend. But definitely they will need to look at the bracket creep at some point just to try to add more money. I don't think what they have introduced now is sufficient. That's my personal opinion.
Wages have definitely increased, and I think it's that wage price spiral, isn't it? You sort of businesses charge more. That means they get paid more for their goods and services. That then trickles down into higher salaries, I guess, for staff, and it just causes a spiral, doesn't it? Which is then leads to the
That's
back.
exactly right. Yeah.
So, Ray, just on that point, I think today there was some important information released in the media around inflation, but I think it went up. I think the
Yeah.
headline went up, but then the core inflation, I think, according to what the RBA looks at, was slightly down, but still above 3%. I think it's at around the 3.89 or 3.9% mark.
Yeah.
Which probably might mean that the RBA doesn't increase interest rates next month and they catch up on Tuesday or whenever they seem to be changing the day on which they catch up now. Actually, it used to be Tuesday, the first Tuesday of every month, but now that's except January, but now that's sort of changed. What are do you have any sort of insights, Ray, just from your sort of experience and view on the market? Where do you think interest rates are going to go, and how is sort of cost of living going to be managed through that monetary policy?
Sure. So it wasn't all bad news today. It went a little bit up. Then their forecasts, they were forecasting 3.8. It was 3.9. A lot of people were forecasting 4%. So it was like sort of in the middle. So I think the anticipation now is they are going to hold, not raise and not cut. And a lot of people hoping if the inflation continued to slow down and eventually started to come down over the coming few months, they will be able to introduce a cut. Me personally, I don't think we will have a cut this year. My hope is not to have an increase, and hopefully we will have a cut early next year, maybe as a Christmas present, I'd say. Yeah, so we didn't raise interest rate as high as other countries, like in the US and UK. We thought to have a more measured approach, and that will mean that probably that we will need to keep it a little bit longer than them. So a lot of people thinking that US might bring interest rate before year end, and I'd say we will follow few months after.
Yeah. Ray, we've got another question that's tax related in relation to rental properties. I think we all know, based off what we've seen in the in the market, that the rents have increased across many states in Australia. There's I guess a shortage of investment properties, which has pushed up the rents. Just generally, of course, Ray, with your clients that you support that have investment properties, are you seeing a corresponding increase in deductions then, given the increased revenue that's being generated by those properties?
Yeah, 100%. Everything went up. So interest in particular. So that's the elephant in the room, of course. But everything else. So the council rates, the insurance, the land tax here in Victoria, of course. So all other expenses actually has gone up as impacted by the inflation. But the biggest one would always be the interest. So interest, there is a significant increase in the interest claim over the last year or so, especially with people moving from fixed rate loans to variable loans.
Yeah.
So,
I think during COVID, they took advantage of that sort of lower rate, but yeah, once all the fixed terms expired, they were pushed onto the variable, and now starting to see the increased cost.
yeah.
Cool. And we've got another question, Ray, on claiming the work from home expenses. I know you touched on that during your seminar. I think I'm just trying to distill the intent behind this question. I think it's more around, Ray, I think this person doesn't feel that it's that easy to keep a log every time of all their expenses while they're working from home. Are there any sort of tips that you can suggest? Of course, you mentioned the record keeping and the diligence that you can put behind your approach to keeping records, but are there any other tips that you recommend that just make the process a bit easier, given how busy we already are?
Yeah, so the tip here is a very simple spreadsheet with 1st of July to 30th of June and yes or no in front of each day, or home office in front of each day. That will do. It's definitely easier when you work from home certain days and you work from home for certain days. So it's just like a quick one. And this is all what is required if you are going to use the set rate or the fixed rate per hour. So all what you need to do is to keep a record of the number of days that you work from home, and then that will translate into the number of hours and be multiplied by the 67 cents. And you don't have to worry about anything else. If you have a dedicated workspace, however, and you would like to utilize the actual cost methods, yeah, that will need a little bit of more detailed analysis and calculations. And I don't think that will apply for most people, or it will worth it. I think the 67 cent is sufficient to cover all the other expenses for working from home. So again, it depends on the method that you're going to use. If you're going to use a set or the fixed rate per hour, this is I recommend to most of my clients, because the other method actually would take a lot of more time to calculate. All what you need to do is to keep records of the number of days you're working from home. So again, there is lots of templates online, which is one spreadsheet, one page or one tab calendars, when you can actually use color coding or a VSNO or home office in front of that. So
Yeah. Thank you, Ray. And we just had a question in relation to work-related travel. So historically, of course, pre-COVID times, there was I guess, a greater proportion of individuals were working fully from the office. So travel between your home and the office wasn't deductible. If you are working from home on a particular day and then you do have to drive into the office and then come back and do that multiple times or what have you, then is that an allowable deduction, or is that still classified as disallowable?
that's a very good question. It depends. So homework, work to home is not claimable. But if you have to travel to an alternate workspace, workplace, for example, or so you're saying that, but it depends, like you're going from home to the office and back, and you do that multiple times throughout there, like you are on call. Is that the reason for you going to the office and back, or going for different clients and back because you are on call? Like let's say you are IT. If this is the reason, yes, you can claim that, right? But if you're working from home and you're just going to your ordinary place of employment just to attend a meeting in person and go back home, that's still not claimable, right? So it will depend on the purpose of the travel itself. So homework is claimable in very, very limited circumstances, or with exceptions. If you are carrying heavy equipment or bulk equipment, if you are itinerant worker, so let's say that you're working in Woolworths and you have to travel to a different store every day. So that is claimable if you're going from home to different store every day. So it's not one store. Or if you're traveling to alternate workplace, let's say that you're working in headquarters, but for this particular day, you're traveling to an alternate workplace. So a different, a depot, for example, or a different offices, you can claim all that. So it will depend.
Definitely it's just on a case-by-case basis. And yeah, I
Yeah,
think you're right. It's the purpose of what that travel is is for and how that relates to your work.
Correct.
Ray, we have one question that's not directly relevant to the topics that you've raised today, but just around superannuation. And a lot of people take advantage of the concessional contribution, especially during the last month, during June, to sort of take advantage of any deduction they might be able to claim if they're under the threshold. Are you just able to briefly explain that, Ray, and sort of what benefits do you see in making such contributions to your super fund when you can then claim if accepted, then claim a tax deduction for that contribution?
Yeah, so I'd say superannuation is one of the most effective tax environment that is still viable here in Australia. So the concessional contribution, the cap has increased this year for 30 grand. And how it works is, so we all employers have obligation to pay superannuation on behalf of their employees. And that is currently at 11.5%, increasing to 12% in 2025. Anything on top of that and under the threshold, you can contribute from your after-tax money before the 30th of June. And then there is a form that you need to complete and submit to your superannuation fund, which is a notice of intent. This can be claimed in your tax return and save you taxes. So the money that you contribute over the superannuation guarantee will be taxed in the superannuation fund by 15%. However, it's going to be deducted for you on marginal tax rate. So to take an example for that, so let's say that you earn 100,000, your employer has contributed to your super 12,000, the cap is 30,000, so you get 18,000 to contribute. So let's say that you maxed your super, so meaning you've done a concessional contribution by 18,000 into your compliant superannuation fund. You complete the notice of intent, submit your superannuation fund, and then you can claim a deduction for these 18,000 into your individual tax return. And if your tax rate is on average 30%, that means 15% are saved in taxes, because this 18,000 is taxed at 15% in your superannuation fund. However, you saved like 30% of that in taxes, which is not bad at all. So it's the best thing that you can do. I'd say that this is the best other than the investment property. So a lot of people invest in property because of negative gearing and hoping the property will increase in time in terms of capital growth, that they don't pay taxes on it. But superannuation is exactly the same. It's a long term and it increases in time, and you don't pay taxes on it after the age of 60 when you retire. And it gives you the most effective, hassle-free tax deduction, really.
Yeah, that's quite wise words, actually, given just how, for those that have joined us in Victoria, just how costly owning a rental property can be, given taxes have just gone through the roof.
Yeah, 100%. Yeah, so super, a lot of people are disconnected from super. I'm not sure why. It's still your money. You will have it. So you just need to grow it in a way that it will make it serve you, but in the future.
That's right. There was an article I was just reading early in the week, actually, around just the average wealth of an Australian compared to, an American. On face value, people might think that those overseas get paid more, but they forget the fact that they have quite a significant asset in the superannuation space, and they forget to sort of add that to their wealth, I guess, because I think, to your point, super funds don't do a very good job at keeping their members reminded of the contributions that are going in, and people sort of forget about that it's sitting there.
Yeah.
All right. No, that's been great, Ray. That brings us to the end. There's no further questions that I can see. So thank you again. I'll just share Ray's details on screen. So if you do have any questions, please do not hesitate to contact Ray. This session has been general information only. So if you do have any
Sure.
personal queries about your circumstances or your family circumstances, of course, then please consult a professional like Ray. That brings us to the end. Just a reminder, the session is being recorded, so if you have joined late, you can watch the entire session on our YouTube channel later tonight, and then it'll be on our channel for future viewing. Ray has also prepared a one-page handout, which I'll share with the registered participants by email following today's session, so you'll get a handy one-page summary that you can use for yourself or share with family and friends. And it'll have Ray's details on it as well. Please do follow us on social media. This is how we build our community. We don't actively engage with advertising providers or any marketing. I run Be Informed myself. I founded it myself and I fund it myself as well. And there's no private or public funding for this. It's completely independent, and that's how I maintain the objectivity of the content that's being presented to you today. Our next session is on the 21st of August on Wednesday, and it'll look at if you're renting, or if you know anyone that's a tenant or a renter, as they call them, and wants to learn more about their rights, given the increased proportion of individuals renting properties, then please do join that session, or recommend that they join that session, and hopefully they will learn something then. That now brings us to the close of the formalities. So Ray, I thank you again for your time, and I hope those
Thank
that
you.
have joined today or in the future when they watch it online will have learned something and take a positive step in the right direction when they make a decision that's important to them.
Thank you so much, Carl. Thank you. That was good. Thank you.
So, thank you all for joining. Stay warm. I know for those in Melbourne today, it hasn't even went past 10 degrees, so it's been a very cold day.
That's right.
Have a lovely rest of the week, and all the best for the upcoming August month tomorrow.
Thank you. Thanks.
Bye for now. See you.
See you.